We have Rakesh Arora as well from India Stocks joining in, the founder. Rakesh, hi, morning. Just a little puzzled. What's going on with Vedanta? I mean, what are they intending to do, and will it really work now, the demerger this time?
So it's everybody knows that Vedanta promoters are going through a little bit of rough patch in terms of debt repayment, and there's a bunching up of debt repayment this year and next year. So this year they have around $2.5 billion. Next year around $3.8 billion. This year they have taken care of because they sold 6% of equity, so they got around $700 million plus. Normally they get around $1.2 billion in terms of royalty and dividends, etc. So this year they are kind of sorted. For next year, there's a gap of around $3 billion. Now, to fund that, they might need to sell something. Clearly, as we saw this year, when they tried to sell 6% in Vedanta, the stock has crashed by 25%. So selling stock in the market is not the right strategy. They need to do some strategic sale, and that's why, demerger of all the entities so they can pick and choose what they want to sell. And secondly, it becomes very tax efficient for them because then they pay only long-term capital gain. Otherwise, if it was in a conglomerate structure currently, it will come into the company, then dividend distribution tax also comes into play. So overall, I think promoters are doing, whatever they can to remain liquid in a case they are not able to roll over their debt next year.
But, Rakesh, ultimately, this is a combined debt what Vedanta has. It has to be split in 6 companies. Now, if you are a lender, you would have given money to Vedanta. Now the debt would be split into power, steel, non-ferrous. Do you think it will be difficult to have this kind of an allocation and creditors may just not very happy?
So there's 2 debt. One is the debt which is sitting on Vedanta Resources Limited, parent company, the holding company of Vedanta Limited. Then there's debt in Vedanta Limited itself. So as per the demerger, guidelines, debt has to be distributed into various operating companies. So there could be some issues with domestic lenders, but I don't think it will be that great a challenge. I think the overseas debt is more important, and that is held in the parent company, which is where the stress is right now.
My next question is that if you own the share of Vedanta Limited, you will get one holding company disadvantage as well. And now that the cash is out, then dividend yield cushion is not there. So what happens to the holding company Vedanta in this case?
So Vedanta Limited becomes a pure holding company for Hindustan Zinc shares, plus for the new businesses which they might enter. So the holding company discount can actually increase. So currently the street is ascribing around 20% holding company discount to the value of Hindustan Zinc shares held. That can go up. We have seen in cases like Grasim, Bajaj Holdings, JSW Holding, this discount can be anywhere between 40 to 80%. So yeah, that is a big risk, for the shareholders. Once the demerger happens, that Vedanta Limited might get, derated. But to your point that, dividend will go down, they have around $400 million of, royalty payment coming in every year. And on a sustainable basis, they can take out around $800 million. So $1.2 billion is a cash flow which Vedanta promoters can really take out from Vedanta Limited even after the demerger. That should be okay for, debt servicing from FY26 onwards. The only problem is FY25, and they need to sell some assets there.
Is there value in buying the stock right now, given that it's already at a 52-week low?
So I won't really recommend from a long-term investment perspective. There could be a short-term bounce because stock has corrected, and even in worst case, we're expecting around 6% dividend yield. So maybe there's a little downside, but long-term investors should stay away.
Okay. All right. Rakesh, thank you for taking time out and joining in, giving us a little more clarity, given the various business developments that we see taking place with Vedanta, the latest one being their plans to create 6 separate listed companies.